Welcome to the Theory of DFS podcast. I'm Jordan Cooper, the co-author of The Theory of Daily Fantasy Sports. It's a 15-hour audio DFS masterclass that you could find at theoryofdfs.com. Joining with me this week is a DFS player slash certified public accountant, Pete Kwon, daily fantasy CPA. I figured it's March 16th. We got a month to go before filing our taxes, and one of the things that I had to learn playing professionally, if you want to use the term professional, which probably matters a lot more in your field, on that's one of the questions I'm going to have is what determines whether or not you're a professional. It's always nice to you bink $100,000, right? I won 100,000. Right, or you win 5,000 or something, and then at the end of the year, you realize you're gonna have to give a bunch of that back to the federal, state, local, and if you're not putting some aside, or you don't have savings, you may get to the April 15th and be like, oh, I owe like $20,000 in taxes that you didn't realize. It's like, maybe I shouldn't have bought that car. I don't know if people get into those situations. I mean, but from a tax perspective, I know you deal with obviously you have to be profitable. Okay, let's get this. The point of this episode is not gonna. If you're a losing player, like you could just skip over this episode because, right? You're not gonna have to pay taxes. Is there now, Pete, with the one of the weirder things about DFS compared to casinos and the horse racing, horse track, other forms of gambling, is that those forms of gambling are reported as W-2Gs, while DraftKings and FanDuel report as a 1099. Isn't technically that shouldn't, because really what should it be that like the amount of entries versus is how much you played, and then your winnings, you should be taxed on the winnings, and then you subtract all your entry fees from there. Now I know FanDuel and DraftKings do that for you and then give you a 1099, but from the government's perspective, from the IRS's perspective, since you're getting a 1099, aren't they technically treating it as you're an independent contractor of the sites rather than someone that's partaking in some type of wager or gambling activity?
Yeah, so FanDuel and DraftKings kind of operate under the assumption that daily fantasy sports is skill-based, merit-based. And so at the end of the year, for the time being, they are still issuing out 1099 MISC forms instead of W-2G gambling forms, unless you're playing FanDuel or DraftKings Sportsbook. So with these 1099 MISCs, there's a little bit of wiggle room, right? Because in the eyes of the IRS, they define a trade or business as something that is engaged in regularly and for profit. And I guess with access to daily fantasy sports on, your mobile device or your computer, you can even obviously play, in your pajamas back at home. There's a lot of wiggle room to treat that activity as a trade or business, which goes on your form Schedule C on your 1040 return. So a lot of people have this common misconception that you need an LLC that's separate from, your 1040 return to treat your DFS income as a trade or business, but that's not necessarily the case. If you are playing regularly and for profit, and your livelihood for the most part depends on daily fantasy sports, for the most part, that's a slam dunk. You can treat your daily fantasy sports winnings as a trade or business and take all kinds of necessary deductions in relation to that generation of income.
But doesn't that leave you? Because I view the tax implications of DFS in like three buckets. Like either you're taking it as the other income, like as a hobby. So
Right.
so you would whatever 1099s you get, you put in the other income, and that's taxed as obviously you pay self-employment tax on that.
So you would pay self-employment tax if you were to treat your daily fantasy sports winnings as Schedule C, a trade or business. But you would not be subject to self-employment tax if you were to treat it as gambling income, which is other income on page 1 of your 1040 return.
Right, because that would be considered like prizes, awards, like it's in that bucket.
Right.
Right.
No. And at the end of the day, that's usually the most unfavorable way to treat your daily fantasy sports income, because at the end of the day, the only deductions that you have and can take are your gambling losses, which can never go below 0. So you can only deduct gambling losses up to the extent of winnings. Whereas if you were to treat everything as Schedule C trade or business, well, now you can get deductions for, the portion of your expenses, for a laptop, computer, TV, utilities that are, used for your generation of your daily fantasy sports income.
But doesn't that all? But I'm going to push back on you only because I have an accountant who's very conservative. Okay, right. He's conservative, and he doesn't know DFS. So like to him, this is weird. I have to talk to him as if like I'm getting a 1099 because I worked for DraftKings because I work like. He doesn't like it's because he'll come back at me and go, why isn't this a W-2G? Like this, if you want to file as a professional gambler, like he has no problem doing so. But his attitude is he always mentions scrutiny. Right. So like in those 3 buckets of hobby, other income, so you treat it as just like prizes, that's the least tax advantageous because you're paying whatever your tax bracket is and you get no deductions, and you're done. If you
get gambling loss,
right? If you treat it as a Schedule C, now you have what your normal income would be plus this side business that has no business documentation to it, and then the LLC S corporation is to me the most tax advantageous because basically you're just an employee. Or an investor, you get either going to get a K-1 or a W-2 from your business, and now you're just taking business expenses. But the way that my accountant always puts it with scrutiny is that that middle one, the one that you mentioned, by putting it on your Schedule C, opens yourself up to more scrutiny from the IRS when it comes to deductions versus if you had an LLC or an S corporation. Because his attitude is he always says to me, you can take the deduction as long as you have document. He's like, are you audit proof? Because he'll always say to me, it's like you could say whatever you want on your taxes, as if they don't audit you, you're good. But if they audit you, you need. So the loss, like when he said, like, well, if you have gambling losses, it's like, do you have documentation of that? Or like if you're going to take business lunches. Do you have an agenda? Because that had to have been a business meeting. Was the express purpose for business? Do you have an agenda? Do you have you can't just take out, I just ordered pizza. And like you can, like he'll say, you can, but if they audit you, all these things you're gonna get penalized. Same thing for the home office. Like for instance, I have an office in my house right here. It's about 150 square feet. And you used to, at least, be able to take, like, if your house is let's say your house is 2,000 square feet and your office is 200 square feet, and that's 10% of your house, then you could take 10% of your electricity bill and your all those types of things. But my accountant says you can do that, just understands that that's going to be like the red flag type of stuff that you're going to get audited for. So it would be much more beneficial to operate your DFS as its own separate entity. So, and then as this own separate entity, I still wouldn't be able to take off those. I mean, you could, but I don't. Maybe am I being too nitty on not taking off expenses like that because I'd rather not have the scrutiny from the IRS?
Yeah. So I guess for the most part, I agree with everything that you said and everything that you've been told by your accountant. Documentation is so important in the chance that you are indeed audited. But I think where your accountant and I differ is kind of just our mindset and our understanding of daily fantasy sports, period, right? I think that, at the end of the day, this is what you do for a living. This is what you do on the regular. You wake up in the morning, do your research, you set your lineups, and you make, per the Roto Tracker and, how transparent you've been, a decent amount of money playing daily fantasy sports, right? In the eyes of the IRS, you are engaging in an activity that is for profit and, regular in frequency. And so, it does depend at the end of the day on how risk adverse or how aggressive your accountant is. But to me, that is a slam dunk of, a trader business, right?
Yeah,
And
but
you
I'm talking about the parts of like this. This is what I'm not saying that my accountant's wrong and you're right, or he's right and you're wrong. I'm trying to highlight the fact that going to someone like you, Daily Fantasy CPA on Twitter, and you do take clients that are DFS players to do their taxes. That going to a normal accountant, maybe they may treat you much more conservatively because they don't understand the business as much. So like my accountant would say, like, why can't, like, I get like my cable, I pay for cable because I get all the channels and I could watch and watch sports. But he'll say, it's like, well, is that exclusively for your business? Said, so you never watch anything else other than, so how you can't take your cable bill off, even though it's in part used for research, quote unquote, but it's not like my computer says. It's like, is that the only thing that you used it on? And if you can't say that it's the only thing, lean towards more of the side of not taking it as a deduction.
Well, this is where, I would disagree, right? So if you're using 10%, 20% of, your television for your trader business of daily fantasy sports, I would argue vehemently that you can deduct for that 10 to 20% from your daily fantasy sports income, right? So why wouldn't you be able to deduct a business expense that is used to generate your business income? So instead of deducting for that full amount, I wouldn't agree to that, especially because part of your TV is used for pleasure, for other activities, et cetera, et cetera. But definitely for a small percentage of that expense related to that generation of income, to me, would be deductible.
Right. I think his attitude is more on the scrutiny end of like, how do you prove, like, he's it's not like he's saying not to do it. He's just saying that you could do it, just understand that it may be more scrutinized, and this is the type of thing that you would get audited for. And especially with him not understanding DFS as much.
Yeah.
And even the guidance from the IRS is not clear.
Right.
Do you want to be put in the position of getting audited and having them, because it's not going to be up to you, how that they view your specific case, and next thing you know, you're penalized and taxed and all this type of stuff happens? Or would you rather pay an extra X% more to make sure that, like, you're not scrutinized? And my attitude is that maybe the lack of scrutiny is less worth, like, me having to try to, because then I have to prove it. Like, when if I got audited, I never gotten audited, I would have to prove, like, that my office is for this use, and the TV, like, do I want to go through all of that for a what type of, it may not be that big of a deduction. Like, for me, like, if I have subscription services, that's fully deduct. Like, anything that's specifically for DFS, my Roto Tracker subscription, that'll deduct. I have no qualms whatsoever about it. But to say that my broadband bill, which is with the cable, everything together, is like $250. For me to, like, how much of that is for, like, yes, I need it for DFS, but it's like, I also need it if my wife uses it. It's a daily thing. So if let's say I lowball and I'd say 10%, and I go $25 a month, I'm going to deduct. Like, the IRS may think it's 8%. Maybe it should be 20%. Like, for that deduction, do you believe if you, at a certain amount of income, I know you're a CPA, so you think every deduction is worth it. But do you think that if, let's say that was my only deduction of $25 a month, $250, in the grand scheme, if I make $100,000, is it worth putting that red flag there than just not taking the deduction at all?
So I think you're looking at it in just a small, focus. I think, yes, if you only had that one minor deduction, at the end of the day, it probably wouldn't be worth it for you to be treating your DFS income as a trader business, because you'd be subject to something called self-employment tax.
Right.
But I guess kind of to piggyback off of what you've said earlier, there are so many additional deductions that you are definitely allowed to take as a trader business. If you do decide to go that route, that doesn't just involve your utility bills. So I'm talking, I think what you've alluded to was a home office deduction, and so that usually adds up to a couple $1,000. Legal and professional expenses. So any accountant that you've hired, those are deductible expenses. Like you said, subscriptions to any of the different tout sites that are available and out there, that's deductible in full. And I've seen, like I said, a portion of expenses for certain items that are used for the generation of income, all adding up to thousands and thousands of dollars, to be honest. And at the end of the day, it is a slightly risky position to be taking, right? But as long as you have documentation and proof, it's tough, even in the eyes of the IRS, to argue against it, right? I'm kind of alluding to your situation specifically because you're right here in front of me. But if, once again, you're doing this daily and for profit, and this is what you do, how can you argue that this is indeed gambling income, right? You're getting a form that's the 1099 MISC. You're not even getting a W-2G, which is the gambling form. You have the proper documentation, and at the end of the day, even if you were audited, how could the IRS prove whether or not 8% or 10% of an expense is? It's such a moot point, right? As long as you have proper documentation, as long as this is what you're doing regularly and for profit, to me, my risk appetite as an avid player and someone that understands the game is that this is definitely a trader business that you are allowed to take, on your Schedule C 1040.
Right, but I mean, I don't, because I run it through an S corporation. But
Yep.
that's the second. To me that's more, according to my account, that's more of the safer. That's why that's the safer way of doing it. And also, for instance, all the stuff that I do for roto grinders, all the stuff for the course, like everything is run through my LLC, which is an S corporation. And I'm assuming as of this moment on March 16th, if you can't, I don't know the dates, but you can't run the S Corp election if you are going to switch over. Like there's a date where, like, if you have an LLC now, you would have to technically run an election and then inform, the state. As you see, Pete, I know something. I'm Jewish, so like when it comes to taxes and stuff, like it's almost like naturally in my genes of like knowing some of this stuff. But let's say for some people that are like, well, I could do it I could do it obviously as the other income, which is the worst way to do it. But if you're playing regularly and you're playing for profit, which is kind of the point of this show, how to think like a professional DFS player. So if you're playing regularly and for profit, to do it on your Schedule C, or at least ask your accountant or go to someone like Pete and have him do it for you. But the third way would be to either set up an LLC, or if you currently have one, like the difference between an LLC and an S corp is the way that is, to me, the biggest differentiation on how you're able to pay yourself, right?
Yeah. So I'll chime in a little bit. I think the election that you were alluding to earlier is the S Corp election, which is the Form 2553 election that is due by March 15th for any calendar year LLC. So at the end of the day, an LLC can be taxed many different ways. It can be taxed as a corporation, or it can be taxed as something called an S Corp, which once you file that Form 2553, which is due yesterday, and for the record, you can file a late S election. You just have to file a little bit more paperwork. But most of the times, this relief is granted if you are planning to file as an S corporation.
Right. But I mean, but typically LLCs, when you set them up as like a it ends up being passed through. So I want can you explain? I mean, I know the answer, but can you explain the difference between having an LLC as a pass through for tax purposes versus having it as an S corporation, which essentially is a C corporation with less than 50 employees?
No, it's 100.
100 now. Okay, I think it used to be whatever. It's for very small companies.
Yeah, so usually when you form an LLC and as a single member, you're what's called a disregarded entity, meaning even if you do have an LLC, you can report all of your income on your Schedule C, trader business, no separate, tax filing. But once you make this 2553 S Corp election, at that point in time, you're electing for your LLC to be taxed as an S Corp. And at this point in time, you have a separate filing obligation. So in addition to your 1040, you have to file a tax return for your S Corp, which is on the form 1120S. And so what you're doing is you'd be funneling your daily fantasy sports income through this 1120S, kicking over income on a form that's called the K1, and then reporting that income directly on your 1040 return. And kind of to echo what your accountant has told you, it's definitely less scrutinized than if you were to report everything on your Schedule C. That's for sure. That's very accurate.
Right. I mean, that's the main reason why I'm doing. I mean, it's like he basically said, if you want to start taking these deductions, it's much better to do it this way than do it your way, and hopefully you don't get audited.
No, you have a great account. Most people are not structured this way. And the reason that you're doing this, in addition to those deductions, are you are not subject to any self-employment tax on your daily fantasy sports income, except on the salary that you're paying yourself.
No, but but truthfully, you don't even have to do that, because like that's on K1. So let's talk the difference of okay, we're getting down the rabbit hole, Pete. Okay, sure. So if you set up an S corporation, the reason that to me, the difference between an LLC with the pass-through and an S corporation is nothing. It all depends on how you're paying yourself. So, for instance, because essentially what you're doing is you're taking the business is like, you don't have to pay on LLC income if it's pass-through. You're going to have to pay self-employment taxes because some entity has to pay the Social Security and the Medicaid, right? Yeah. So, for instance, the way that I'm paid is via W-2. So, for instance, all the money that I make from DFS goes into Blender and Media, LLC.
That's your LLC name?
That's my LLC, right? That's been my LLC since. That's why I'm called Blender HD. Blender. It's a Bad Religion song. It's when I had to come up with a company, Pete. I didn't want to be Jordan Cooper LLC. I didn't whatever. I wanted to come up with a company name since I come from the punk rock kind of hardcore scene. A lot of times you name your band a song from your favorite band, something as whatever. So I'm like, my favorite band's Bad Religion. Let me go. I mean, I know all their songs. I'm like, what sounds good? Blender Media, because I produce media. So it's like, that's the name of my company. So that's where Blender HD comes from. That's where Blender Head and all that comes from. But so you funnel everything through there, and then through that business, you take off all the deductions. And then you could also take off the losses from other sites. I mean, you have to treat everything as a business. Like that's your business. Any money that I make from roto grinders, any money that I make for consulting, it's going to that EIN. It's not going to, I'm not reporting it on my as my SSN. It's my EI the identification number for the LLC. Yeah. But now normally if you don't have an S corporation, just if that netted $80,000. It would just be, K1, 80,000, and I'd end up paying self-employment tax on that. But you could also, in the S corporation, for instance, it all comes back to tax scrutiny. Everything I do is for tax scrutiny. W-2s from an employment perspective, as far as verifying income, this is outside of DFS, is like the gold standard. So
Mhm.
like if I were to apply for a mortgage, if I were to
Mhm.
apply for credit or any type of lending situation, when you're
Mhm.
self-employed,
Mhm.
the paperwork and the scrutiny is like 4 or 5 times higher than anything else because
Yeah.
just because you got paid this year doesn't mean you're going to get paid that year. Or what happens if your business is down? But
Yeah.
I get paid from my S corporation.
Yeah.
What's getting my accountant said because I said to him, I said, well, couldn't I just avoid paying self-employment tax if I just paid myself $1? And he goes, because you have to pay yourself what's considered a reasonable
Yeah.
salary. So you dive. Let me. You're the expert. Yet I'm explaining it. Go. Can you dive more into like? I'm assuming what I'm doing is smart. Uh,
Yeah. What you're doing is what's necessary for S corps. So let's take a step back. Um, once you form this LLC, before you make this 2553 election, you're what's called a disregarded entity, meaning you do not have to issue any K1s at that point in time. You're just reporting all of your trade or business income from that LLC directly on your Schedule C. Now, once this Form 2553 election is made, at that point in time, you're telling the IRS that you are wanting to be taxed as an S corporation. And as an S corporation, you're not subject to what's called self-employment tax, except on the wages that you are paying yourself through this W-2. Now, to your point, why not issue yourself a W-2 for $1, right? At the end of the day, your salary has to be reasonable, right? And so that amount is what you would pay somebody else to run your LLC, if you had that option. So nobody in their right mind, would take $1, for a salary. And in the eyes of the IRS, that would never hold. But at the end of the day, the wages that you pay yourself is still subject to that self-employment tax. So,
it's either you're gonna pay the self-employment tax or the business is gonna pay payroll taxes. So it's gonna
yeah,
end up being a wash regardless. It just depends on which entity pays it.
yeah. So, quite frankly, at the end of the day, you know, as a shareholder of the S corporation, you're trying to pay yourself the least amount of money possible to pay the least amount in self-employment tax, but it has to be a reasonable amount that.
Now, from an income verification standpoint, like adv- in any way that you do it, like we're talking about, like it's not a matter of uh, getting away with not paying taxes. It's just basically like what entity pays and how. Like you may get a slight break here and a slight break there, but we're not talking about things where like, oh, if I just did it this way, I saved $10,000 in taxes. It's unlikely to be to that extent. So, like for instance, the reason why like I pay myself more, like
Mhm,
like if you have an S corporation,
mhm,
I pay myself via W-2 as well as K1
mhm.
as the investor, the as the shareholder. Uh,
Shareholder.
but I always think in terms of uh, like lending situations and verified income of like when my wife gets paid, she works for an employer. Like
Mhm.
no one will ever scrutinize her income because it's documented as a W-2,
Right.
and people treat companies, society treats W-2s as, oh, you're employed, which means you have a job. How long have you had this job? 5 years, and you have a W-2 for the past 5 years. Like, okay, we approve this loan. So, like, if I make $120,000, if my S corporation makes $120,000, like, I find it much more advantageous long term to pay myself the W 2 income of that so that I
Okay.
have verified like the past 2, 3, 4 years in the case that I do get a mortgage, get and any type of credit situation
Yeah.
where like because doing it like, oh, can I pay myself 60 and then 60 via K1? It's like what's how much am I saving? I mean, it ends up coming out to pennies on the dollar,
Oh, I don't know about
essentially.
pennies on the
I
dollar.
mean, in the grand scheme of things.
So self-employment tax is around 15.3%.
But but the company's paying that already via payroll tax. The W-2, I'm not paying the self-employment tax on.
Well, the company's paying 50% of that, right? So if you were to funnel your daily fantasy sports income through this S corporation and you're paying yourself 60 grand, you're only paying self-employment tax on that 60 grand.
On the K-1 income. I would be paying the self-employment tax on the K-1, not on the W-2 income. W-2 income, I wouldn't be paying because the company is paying.
Exactly, yeah.
Right, so that to me, putting it on the W-2 is more advantageous than putting it on the K-1.
I think the cost savings add up a lot more than you may think, and I think off the record, I will definitely put together something for you.
Okay. Oh, great. Okay, that's fine. I'm just going by what the numbers and my account and whatever. This is why at Daily Fantasy CPA. I mean, obviously, like my accountant, like the type of stuff that I'm doing, like I'm like the only one that's like. Remember, I'm dealing with a normal. Like this is a guy that's like in his early 60s or so that like does stuff on paper. Yeah. Like email, like I email stuff to him and he'll print it out. So he's an old school type of accountant. Like, yes, he has a computer system, whatever, but he still has a computer that has like a tube thing, like one of the tube monitors. Like it's like, did you update your Windows since XP type of things? So, and obviously he's extremely experienced or whatever. And he did my normal business when I did digital marketing. So he did all of my and great. I mean, whatever. But this type of stuff of like, well, you're a one-person S corp. Is that like he questioned that? Like, can you have a one-person S corp? And it's like, well, according to the IRS, you can. He's like, well, I don't know about that. And it's like, I'll set it up. Like, because his attitude is that if you're an owner operator of the S corp, then it has. He's like, he doesn't understand why it shouldn't only be pass-through income.
Yeah,
or you don't even know. This is why I'm asking you.
No, I don't know what you're asking. You can be a sole member of. You can be a single shareholder of an S corporation. If your accountant says you can't, I don't agree with them.
Okay, well, I mean, my accountant said that it's not like I can't. It's just that the guidance and the laws kind of contradict one another, as far as if you're because in an S corporation. Like, for instance, like the only reason I say this is because I used to have a partnership. So my digital marketing business was me and someone else.
Right.
And one of you has to be dedicated as you could be the owner operator. And one could be the investor, the silent partner type of thing. Now, as the owner operator, I could get paid a salary and I could get a W-2. And he and my partner could get a K-1. He wouldn't get a W-2 because he's not doing any work. He's just the investor. So he's going to have to pay separate taxes on his K-1. But if someone has to be the owner operator, my accountant would say, someone has to be the owner operator of the business. You can't have an S corporation and have an employee that is not the person that owns the main shareholder of the company. So if you have two of them, if you have two people, obviously, one person could be the employee of the company, while another person could still own. Two people can own the company. One person can operate it. But if you're the only person, you can't be the employee of yourself because you're still the only shareholder. So basically he said that it's contradictory, based on what his knowledge. Of course, he's never dealing with one person S corps. So like all the stuff that I do with him is new to him because he's dealing with like the car wash or a doctor's office or personal, like he's not dealing with even if it's a financial advisor that has 4 employees, like smaller companies, but not in the cases where it's like, well, I'm the sole operator, but I'm also working at home and I also have this business. And like he originally said to me before the S corporation, he's like, this should only be pass-through income. Like there should be no reason why. The only reason I have an S corporation is because I used to have a partner and then I bought him out, and now I still have an S corporation. So I just said I'm treating myself as a one-person S corp, and basically he said we'll keep on filing, but if they say anything, don't come crying to me type of thing.
Oh, I don't think there's anything wrong with having a single member, an S corporation with just one lone shareholder. No.
Even if even if you're paying W-2 Inc. I think the main thing that he was saying is if you wanted to do a K-1, no
Hmm.
problem. Like that to him that was fine. It's just a matter of how could you be the owner operator and an employee getting paid a W-2 at the same time?
So it might sound a little unorthodox, but
Legal.
it's it's legal. Yes,
Okay, it's legal.
it's not it's it's not it's just a little untraditional, but I don't think it's illegal by any means.
Right. But does this highlight my questions? I'm putting you under the fire because I'm
Yeah,
using
these are
my
tough questions.
I mean I'm being transparent. I'm using my actual tax like how I do my taxes to ask
Yeah.
you questions. And maybe I go to my accountant and go, Pete Kwon said I could do this, so do it. Uh,
Yeah. No, I haven't disagreed with anything that he's been doing. But I think just to answer your earlier question, yeah, no, you can have a single member, S corp, no problem. Single shareholder S corp.
okay.
Yeah.
But I mean I think this highlights why if you're a profitable DFS player,
Yeah.
having an accountant that knows the business like yourself is much
You
more
don't.
advantageous because like look at the questions that I'm like you're telling me that my accountant is actually pretty damn good
Yeah.
at setting
We
everything up.
Yeah, we have agreed on almost everything so far, except maybe just how risk adverse he is on that Schedule C. But to your point and to his point, it is definitely heavily more scrutinized in that S corporation. So no, I think for the most part, he and I might have to grab a beer because we are on the same page.
Do you find that a lot of other accountants aren't on the same page?
Yes, yes, especially some of the ones that are less open to understanding what daily fantasy sports is. So, to them, to some of the more traditional accountants out there, they don't understand what daily fantasy sports is at all. It's just, oh, fantasy football, fantasy basketball, that's gambling, But, like I said, kind of backtracking from our conversation earlier, you're receiving a 1099 misc form. You're not even receiving a gambling form, right? You're playing regularly and for profit. You have a strong case to treat your daily fantasy sports income as a trader business.
Right. And
And
then
most people just don't understand, that there are actually people out there that play daily fantasy sports, regularly for profit and, to pay bills, right?
but how is this any different though to an accountant as if this was a pottery business? Like couldn't you just explain to it like I'm going to get a 1099 and then why do I even have to explain what it's for? Like just setting up like if you wanted to set up an LLC or an S corporation for your pottery
Yeah.
business it would be the same exact thing. But what you're saying predominantly is that if you're obviously the paperwork to set up an LLC like that's a little bit more advanced. I mean,
Right.
but it's not hard. I mean, LegalZoom could do it for crying out loud.
Yeah. No, they can.
Right.
And,
But the thing is that a lot of people are in the situation now. It's March 16th, and they're like,
Mhm.
I've made $55,000. I don't want to. Don't realize I have to pay $18,000 in taxes or something. And how do I file this? And most people are in the situation of, well, I'm going to set up an LLC, an S corporation. I'm going to file my payroll taxes. Like you're in the situation where it's like, do I put this under other income or do I put it on my Schedule C? And
yeah.
to me, I think that's the predominant amount of people are going to deal with that rather
Yeah.
than me, who for the past like the third year in of me playing DFS, I knew that this was going to be a
Yeah.
substantial part of my income, and I
Yeah.
already had an LLC from
Yeah.
my other business, so it's like it was kind of all set up for me, and I planned on it being this way. But most
Mhm.
people don't have a plan,
Yeah.
so really that first and second bucket is what you're dealing with more so than that. If
Correct.
you wanted to set up all that other stuff, like that's something that you would do this year for next year's taxes.
Correct. Correct. So, yeah, to your point, anyone that has significant income at this point in time should consider, still filing as a Schedule C if they're playing regularly and for profit. kind of what I said earlier was that you don't need an LLC to file your daily fantasy sports income under Schedule C. But to echo what you've said, you are correct. If you are planning to funnel your daily fantasy sports income through an S corporation for the tax year 2021, you did need to file this Form 2553 S Corp Election by March 15th, which was yesterday. Now, this isn't meant to discourage anyone from doing that. You can file late. Whether or not it's accepted by the IRS is another story. But most of the times they do file late S Corp election. So anyone that is winning big in a daily fantasy sports contest from over the next couple of months should definitely try to retroactively file this S Corp late S Corp election kind of late. But yeah, no, to your point, I think a lot of people just don't understand the tax implications of daily fantasy sports and winning. And so it's really important to just ask the right person the right questions to kind of get that guidance. And so I guess if anyone here watching the show, has questions in regards to, their tax return, definitely ask your certified public accountant whether or not you can treat this 1099 MISC from FanDuel or DraftKings as a trader business if you are playing regularly and for profit. I've corroborated information from other CPAs across the industry, other professionals that all have independent CPAs, and for the most part, there is a high number of professionals out there that are on board with my opinions and how and where I stand in terms of daily fantasy sports income. And so most of the times it's just about asking the right question to the right people, and then trying to make sure that your accountant is comfortable with the position that you're going to be taking.
If you're going to file as a Schedule C, does that impact? What are the impacts of that if you're filing jointly, married jointly?
Yeah.
Like as far as like the standard deduction goes, as far as like, because you're now going to be itemizing deductions, and it's not. Well, I mean, aren't you? I mean, you're itemizing deductions for this business, but it may not be your primary business. I'm just asking, is there anything different that you do if you were filing as you're just individual, single, head of household or something versus married filing separately versus married filing jointly? Like, are there any implications on that where like your wife has a job and like, does it affect her taxes jointly?
Well, so collectively on your married filing jointly return, you would be reporting this Schedule C daily fantasy sports income under one of the taxpayers. But at the end of the day, it kind of all aggregates together on your pages 1 through your earlier pages of your 1040 return. So no, it's at the end of the day not too big of an impact whether or not you're filing single or married filing jointly.
But if married filing separately, it would matter.
No, that wouldn't matter either.
I thought if you're married filing separately, if one person itemizes, the other person has to itemize.
Right. That's definitely true. But I think when you're saying itemize, I'm kind of picturing you aggregating all of your deductions. That's
right. But I mean, if you're filing separately, obviously you can't be this is such a weird case. I'm just bringing it up only because, like, for instance, like if me and my wife were filing separately, mm-hmm. she would take she has no deduct. She has no normal deduction. She would take a standard deduction, but if I'm itemizing my deductions, like she couldn't take the standard deduction.
So Schedule C doesn't impact whether or not you take the standard deduction or if you're itemizing.
Okay. Even though I would, but wouldn't I be taking deductions such as the home office and all that type of business stuff? Wouldn't that count towards that?
Not for itemizing, no.
Oh, okay.
Those deductions are, I guess, aggregated, or I guess, I hate using the word itemize in this. They're aggregated on your Schedule C, but it doesn't impact your standard deduction or whether or not you choose to itemize. So
Okay.
completely separate.
Okay, I'm bringing up all the cases of people that have this and have that.
Yeah.
I mean, the tax code is confusing enough to people that it's like, because everyone's situation may be different.
Yeah.
If you're single, if you're 27-year-old single person living renting or whatever, like the taxes are pretty easy to do. But once it comes into like you're owning a home, you're getting interest income, you're getting, you have children, you're getting dependent credits, like then it starts getting into like, then someone like you, Pete, could look and see what the tax implications of different types of filing based on it may be that someone with 4 kids or something like that, you get a better like state credit or something if you have lower income. So like you keep your W-2 income lower, but you raise your K-1 income. So even though you're going to pay self-employment tax, you actually get more credits because you have dependents and a home mortgage. Like I'm just throwing all these things together variable-wise. But
yes.
But that is what I mean. You're a CPA. Essentially, this is what you do for a living. Figuring out the best way to pay your taxes.
Correct. So if you have multiple children, yes, you may receive a child tax credit. But yes, there are different ways to tax plan around your daily fantasy sports, and it does factor in many different variables that might be unique in your individual situation comparatively to other people.
Okay, another topic. It has nothing to do with it. It has to do with taxes. Similar to the stock market, tax harvesting.
Okay.
Like at the end of for instance, depending on how you're filing. Because we have a situation where, let's say you play on multiple sites. You play on DraftKings, you play on FanDuel, you play on Yahoo, you play on SuperDraft, maybe you're playing on Underdog, you're doing best ball stuff, you're playing on No House Advantage, you're playing on all these places where you're going to get a 1099 from it. But let's say I'm up 100,000 on DraftKings and I'm down 20,000 on FanDuel, and I'm down 5,000 on Yahoo, but up 10,000 on SuperDraft. Now, obviously, if you're filing through an S corporation, that all just becomes whatever it is. But if you're filing, right? Let me make this the first point clear is that if you're filing as a trade or a business, or as an S corp or an LLC, the losses from one site could counteract the winnings on another site, but you couldn't do that if you're treating it as a hobby, as prize income.
So at the end of the day, whether or not you treat your daily fantasy sports income as gambling, as Schedule C trade or business, or as an S corp, you can net all of your winnings or losses from one site across the other, as long as you're just consistently treating all of your income the same way, income and loss the same way.
Well, you say the word consistently. I think that's the big word.
Yeah, no, as in you can't treat your FanDuel winnings as a Schedule C trade or business and then, treat, other DFS related sites as gambling income or loss. You have to consistently, you have to be consistent with the treatment of your daily fantasy sports.
What happens in past years? Let's say I fucked up, Pete. Let's say for the past 4 years, I've been putting my DK 1099s as prize winnings. But this year I'm a business now. Are you going to get more scrutiny by doing it that way?
So I think for the first year, it's more than acceptable, right? So if you didn't know that you could be treating your daily fantasy sports income as a trader business in the prior year, and then in, the secondary year, so you watched, your show here and determined that you could treat your daily fantasy sports income as a trader business. Well, then that reclass from prior year to this year is more than okay, right? But then going forward, if the facts and circumstances haven't changed, you're still playing daily fantasy sports regularly and for profit. You need to consistently be treating your daily fantasy sports income as Schedule C, right? You can't just swap back and forth from year to year to pay the least amount in tax. That's tax evasion, which is illegal.
But I mean, you could do it by accident, though. Right? Is there how would you pay less tax by treating it as gamble? I mean, isn't that the least tax advantageous position to have anyway?
Oh gosh, I don't mean to complicate the situation for any of the viewers, but
No, I want to no, I want to because
yeah,
to me it's a math problem because I'm like, well,
no,
like putting it as other income is the worst. What like how is flipping back and forth going to end up me paying less taxes?
I can answer this question.
Good,
Oh
good.
gosh,
I'm interested now. Now I'm interested.
Jordan, say you today win $1 million off of DraftKings or FanDuel, right? And
Which the only way I could do that right now is if I rob Big T. But no, but no, in PGA.
sure.
But
Okay,
but
so
let's say I did. Okay, I won $1 million. So great.
okay,
I loved it, Pete. I love the
yeah.
story so far. I love it.
So if you were to treat that $1 million as a trader business, you're subject to self-employment tax 15%. So we can aggregate all of the deductions that you might possibly have for your trader business of daily fantasy sports. But I don't know if it's going to top, you know, that percentage of self-employment tax that you would now be subject to that you wouldn't have been subject to if you reported everything as gambling income, right?
So now now I get it because then and the years that I make the least amount of money, I do it as a business, and the ones that I make the most, and I get around the self-employment tax.
Inconsistent, illegal tax evasion, stay away from it. You're going to, well, hopefully you don't go to jail, but you may go to jail doing, shady shit like that.
Right, but I mean, that's one of those things that would be a red flag.
Correct.
Like I can I view it as like how many red flags do you want to put on your tax form, and how risky are it's like do you want to play cash games or do you want to play GPPs, right? I want to play the nice heads up. I want the double ups, like any red flags. I'd rather not have the IRS scrutinize
Yeah.
my taxes, especially with multiple businesses and income streams. And it's
Yeah.
not to me, it's not even the headache. It's not even like, well, yes, you have all the documentation. It's like you never know how tax laws are. You never know, they you end up having a lien on your house, and then you have to prove otherwise. I mean, you hear about all these nightmares. So, obviously, if you're going through a CPA, you're much more protected
Yeah.
from the IRS than you are by just I'm going to do it myself. And if the FBI shows up at my door with handcuffs, I know I did something wrong.
Oh gosh.
But
Yeah,
but you're not. Let me just make it as a CPA, you know this. Like no one. I think the better advice would be if you don't know what you're doing, at least file your taxes, because you're never going to go to jail for filing your taxes wrong. You're going to go to jail for not filing your taxes.
Well, I think if you don't know what you're doing, maybe seek the opinions or the advice of a licensed professional would probably be.
Well, that would be the best, but
before you file your return.
Right, but underneath that, but I mean, there has to be, Pete. We know people. I mean, because DFS is a bunch of investing in Top Shots, investing in this and Bitcoin and all this type of stuff. You have to think that there are 20 somethings that are get the 1099 from DraftKings and like it never appeared. There's no 1040 on record because like they don't have a regular job or anything like that. That it's just like it's out in the ether and screw it. I'm not going to file my taxes. Like that's something you could go to jail for. Like even if you filed your taxes, let's say, Pete, worst case scenario, it's your first year of being profitable at DFS. You were a loser. You didn't understand any of the tax stuff. You won $500,000 and you spent it all. I withdrew it from DraftKings. I spent it all, and then you get a 1099, and apparently you owe $140,000 in taxes or something. 120, whatever, somewhere around there. And obviously you don't have it because you spent it all on cocaine and hookers. Who knows? You spent it all on something. The worst thing that you should do is to not file your taxes. Like you're going to owe the $120,000, but you're not going to go to it's not going to be tax evasion. It's just going to be the IRS will try to put you on as best of a payment plan and give you as much of a like people are afraid of the IRS, and it's more the fact of like most of the time they're overworked at they're not going to find out as it is. most likely, unless it's an egregious case. And if you can't pay your taxes, it's going to be like as long as you're working with them, as long as you're open, like you'll be fine. But if you're trying to hide stuff and not file, that's when, you may not get it now, right? It's like, oh, I got away with not paying $120,000 worth of taxes. Trust me, probably 15 years from now, you're going to get a phone call, you're going to get a letter in the mail, and the piper's going to come at some point. So I think a lot of people out there, especially the 20-somethings, may be listening to this episode going, screw it, I ain't going to pay it. I'm going to, liquidate it, put it all in Bitcoin, and do all these transfers, do like money laundering types of activities. And especially in the digital age that we live in now, like, if anything, at least file your tax. Let them be wrong rather than not file them at all.
Yeah. So at the end of the day, if you do make more than $600 on DraftKings, FanDuel, any of the other DFS sites, you're going to be issued this 1099 MISC form. And you're not the only person receiving this form. The IRS is going to be getting a copy as well. And so at the end of the day, to Jordan's point, it is very important to, at the very least, file this income on your tax return, right? And I don't know exactly how much, most of the times you just get penalized. You get, penalized, and the IRS tax on a little bit of interest here, or a lot of interest, depending on how much.
Well, typically, I think it's up to 2.5% of the total. It's like 0.5% per month, up to 2.5%,
right?
Or something. But you would know more than I don't know what. I've looked into this. I mean, obviously, it's like, well, if you don't pay on time, you're going to pay this and whatever, because people, they win a lot of money and then they just go up. I forgot about the taxes, and I think the worst thing, I'm going to repeat it again, the worst thing to do is to not file. And when people, even Pete, let's say Pete, if someone won $400 on DraftKings over the course of the year, you're supposed to report that. You're legally supposed to report that income. The difference is that there will not be a paper trail for that. So as a CPA, Pete, if someone came to you and said, I won $300 on DraftKings, do I have to report that income? You're going to tell them yes, but you're going to kind of wink and go, no one can prove that you won that, really. Maybe you don't have to.
You're going to get me in trouble. Any amount, even if you're not receiving a tax form, under $600. So if you made $599 or less, you're not getting a tax form, but it is still technically taxable income that you should be reporting on your tax return. The IRS, it might not be able to track this, but that is still taxable income that you should be reporting on.
Right, just like if you went around the neighborhood and offered to mow other people's lawns and they paid you $20 in cash, and you're supposed to, like, if I went to my neighbor right now and said, I will mow your lawn for $20 and they paid you $20, I'm supposed to report that $20 under other income. The question comes in is that how could you possibly get audited on that type of transaction? So, like, I think that's the wink that you give, but as a CPA, you can't tell someone, no, you don't have to report that.
Correct. I can't make you report anything, but if you're not getting a tax form if you make under $600 in net profit, across the sites. So I can't make you report anything, but it is still technically taxable income.
Tax harvesting. Are there any strategies at the end of the year? So let's say I'm up X amount on this site, down this site, up this site, whatever. When it comes to obviously aggregating that together in some fashion, whether it be in an LLC, S Corp, Schedule C, whatever, also based on your current, like, let's say this isn't the only thing that you do. So are there instances, because we hear this from some professional DFS players of like, I'm going to play high volume in December to reduce my tax burden. In worst case scenario, you're worsening, you're lowering your tax burden. In best case scenario, you're winning more money. And does that have to do with like what tax bracket you're in? and how you've set up your DFS play, because there has to be an advantage of like, well, if I could get myself underneath a certain tax bracket, like just underneath it, like I'll actually pay less taxes than if I'm just right above it. Like what implications are there especially at the end of the year, because you know that kind of what your tax implications are going to be,
right,
more or less. So are there things that DFS players can do, in December-ish, that may sound weird in January but make sense in December?
Yeah, so at the end of the year in December, you'll kind of understand per, Roto Tracker what the amount of net profit that you have from daily fantasy sports is. And so if you are profitable in the early weeks of December and say you've made close to $100,000, well, every single dollar that you technically lose for the rest of December, you're actually, only losing, 60 cents per the dollar, assuming, if I'm being really, conservative here, a federal tax rate, in the 30% and also state tax as well.
Right.
And so if you're profitable at year end, I wouldn't call it tax harvesting. I'd call it more of a tax shield, in which you're kind of paying less in tax from additional losses that you've incurred in the month of December, and or potential more gains that you have for the rest of the year. So I guess if you are a high volume player or even just a casual player, you can kind of determine where you stand, where you kind of stand at the end of the year in December, and then either play a little bit more aggressively and or play a little lightly too. It's personal preference there, but the idea is for every dollar that you're losing, you're paying that much less in tax on it.
Right, and you're doing this more in December because you have more of a sense. It's technically the same as you doing it in February. It's just that you don't know if you're going to have you don't want to have a losing year. You still want to make money, but at least in December, if you're up, let's say you're up $400,000, and now you're in a much higher tax bracket, and it's like, well, me playing the Thunderdome is not as costly now as it would have been when I didn't have $400,000 worth of profit for this year back in February. And hey, if I win the Thunderdome for $30K, great, I make more money. And the worst case scenario, I'm getting a discount off of my taxes.
So I think one thing that I wanted to kind of reference was something called the Marginal US Tax Rate, which means that at the end of the day, say, I don't know the tax bracket off of my head, but say, you made $100,000 in income, and, the bracket says that, over 100,000, you're getting taxed at a higher rate. Well, you're not suddenly pushing your tax bracket to be at this higher, rate. It's the U.S. has a system called the Marginal Tax Rate, in which your first dollar is always going to be taxed at the lowest rate. It's after you hit that certain threshold and that tipping point in which the next, I guess, amount of income is taxed at that higher rate. That kind of makes sense.
Right. People don't get that if you make a $500,000 a year and you're getting taxed X, you're not getting taxed X on the entire $500,000. If your tax bracket starts at 122, it's all the money from 120. If the tax bracket starts at 122,000 and and you made 124,000, it's like the only extra tax you're paying is on the 2,000 extra.
Yes,
that's their bracket. It's not the whole thing. So you're not doing anything cute by, can I lose another $2,000 to save money? It's like, no, it's just that 2,000 is just being taxed at a slightly higher rate as you go up. But of course, as the profit, I mentioned the profit zones because obviously making $400,000 in DFS, like 300,000 of it is being taxed at that rate versus your first 100,000 at that rate. So maybe you get more of a tax discount the more money you make, right? Because if you're at the tax bracket, if you're up $3 million in DFS, like the first 38,000 of it is being taxed at one rate, and then the next 50,000 at another rate. Yeah, but you have so much, much is being taxed at the highest marginal tax rate that if you want to get more aggressive in December, you're going to actually get more of a discount. I think that type of, I'm calling it tax harvesting. I don't know what do you call it, tax shielding?
Call it more of a tax shield, but yeah.
I think it's more beneficial to think of that when you're in those zones versus like, oh, I'm up 8,000 this year. Should I be like, dude, like don't try to lose money to like at that range. It's more of the 6-figure, 7-figure range where you're thinking more about that. Which is a good problem to have. But in DFS, if you're in that range for a year, like that's a good problem to have.
Yeah. I think of tax harvesting more as like, for like stocks in which you're kind of selling at a loss to offset some of your gain.
Yeah, but isn't that what I'm doing? I'm playing a contest, not hoping that I lose, but if I do lose, it offsets. I know it's not technically the same, but it's the same.
I call it more of a tax shield.
Right, but it's the same mentality you'd have for stock. Yeah. That's why I view it the same way. It's like I'm not going to sell this in December at a loss if I don't plan on holding for 5 years and I already have realized gains. And if I just sell right now, all those realized gains go to zero, and I'm like, I don't have to pay. Like that's essentially it's the same mindset, right?
Yeah. No, I think like DFS tax harvesting is like setting like a bunch of placeholder lineups and just intentionally losing.
Yeah, but why would you do that? There would be no benefit to do it.
We don't want to do that. That's why I consider it more of a tax shield. Try at the end of the year, maybe a little bit more aggressively, and then if you're profitable, more power to you. If you lose, you're losing less on the dollar.
Are there any other tips, tricks, things, strategies, or mistakes that you see DFS players that are playing, to make it clear, regularly and for a profit? Because obviously if you're not doing either of those, then you're just putting in other income. There's nothing that's what you do. Is there anything that you see people making mistakes doing? I mean, in your practice, from other accountants or in their play? I mean, like they're obviously, like we mentioned before, like you shouldn't intentionally lose, right? It's like, oh, I'm up 10,000, I don't want to pay taxes, let me purposely lose 10,000. Like that's not smart. So are there any other types of things? I know you have a guide that you sell that I have not read, but I assume it covers most of these types of things if you're going to do it on your own.
Oh yeah.
But what other types of advice that you would get other than contact you at Daily Fantasy CPA on Twitter and pay you to do it? Because I think a lot of people would just rather just go, instead of me getting this guide and me doing it myself or showing it to my accountant, Pete, I'd rather you just fuck it. Just put your hands up and say, Pete, you do it.
So I think a lot of the times, a lot of these daily fantasies, DFS players will get these tax forms at the end of the year and just take it for what it's worth and, assume that DraftKings or FanDuel issued them correct amounts, right? Oftentimes I feel that there are a lot of mistakes, not pointing any fingers, made internally within, some of these different sites, and you shouldn't take what they give you on a tax form, and assume that it's 100% accurate.
It's that. Let's just make it clear. It's never 100% accurate.
It's
literally never. It's either really close or really off, but it's never completely accurate.
Yeah. So
and also, Pete, you have to understand. You can't just go by RotoTracker because they're going to take into account all the rewards and everything. Like if you contact them, they'll itemize it down a little bit more.
Yeah.
But like in my experience from DraftKings, because I never played that much on FanDuel to ever get a 1090, because I was like 99% DraftKings.
Yeah.
So like this is the first time I'm getting a FanDuel 1099. Not because I was not profitable, I just was barely playing on FanDuel.
Yeah.
But on DraftKings, like every single year I've gotten a 1099. It's if you compare to RotoTracker, it will be off to $500, $1,000 or something. And then a lot of times that's all the rewards and stuff that RotoTracker is not taking into account because it treats it as actual dollars played. But there are it never happened to me, but I know other people where their 1099 is off in the thousands upon thousands,
and
it wasn't actual, and it wasn't because of reward. It was just a fucking mistake.
It was just egregiously incorrect. Yeah, no, I've seen that a couple of times, and it's I do feel bad because a lot of people just get their 1099s and like, it is what it is, time to file. But, oftentimes they do make mistakes. So it is important, circling back to what your accountant said, to keep a detailed and accurate report and to reconcile, any differences that you might not be able to, that you're kind of noticing.
Would you consider RotoTracker? Or some type of, you could have your own proprietary Excel or whatever to be like the best form of DFS bookkeeping there could be?
It is very convenient, I'll tell you that. Well worth the $200 something in annual, expense. That's completely deductible on your tax return, for the record.
Right, but I mean, if let's say you did get audited by the IRS, like there can't be a better record than here's all the contests. Here's the receipts. I mean, it's literally the receipts of every single entry I've ever played, ever in I mean, like how? Oh no, we're not going to take this is. I mean, the IRS is willing to take written notes.
Yeah.
That you could technically forge and just say I made this up. So if they can't take RotoTracker, I don't know what else would be be better.
I think just Excel spreadsheet, just exporting your entire CSV history on the year and keeping everything in Excel. You couldn't do anything. I mean, I think that's more than acceptable, right? Unfortunately, fortunately, you don't receive a 1099 MISC for any DFS loss, right? And so it's up to the taxpayer to keep a detailed record of all of their, transactions. And so at the end of the day, definitely keep a running, record in Excel, which it's in
RotoTracker. I can track all my losses in RotoTracker.
Right. But in theory, that should tie to your CSV report, which is on, your Excel spreadsheet, right? So yeah, you should ideally have both.
Right. And lastly, because I see this on Reddit all the time. These the tax questions on Reddit are always the most hilarious, and on Facebook. Twitter is a little smarter people maybe. The 1099s, and none of this have anything to do with deposits and withdrawals.
No. Oh my gosh.
I know that we should have covered this in the very beginning, because so many people are like, well, if I leave my money in an account and never withdraw it, like, do I pay the tax on the deposit, or like none of that even, like, that's not even part of anything.
You're not taxed on deposits or withdrawals. It's your net profit at year end. If it's over $600, you're getting a tax form in the form of a 1099. If it's under, you're not, but it's still technically reportable income. Whether or not you choose to report that under 600 is up to you, but it's still reportable income. But to your point, you do not receive a 1099 for any losses. Keep a detailed record of that.
And then so you can take them off on your winnings.
Correct.
And hopefully,
even reporting as gambling or Schedule C or funneling through an S corp, you can deduct as long as you can net your winnings or losses across sites.
Right. And just now you're up to more scrutiny. I think that's the key. Pete, am I too much of a tax nit?
No, any deduction you're going to be under more scrutiny. By the definition of the IRS, any expense is decreasing taxable income, right? And so you're reducing the amount of taxes owed, your tax liability at the end of the day. Any expense will trigger more scrutiny from the IRS.
So would you consider, to me, this is like a paradox in a way. Mm-hmm. A nit is someone that is like cares about saving like the smallest, like chasing up the smallest. Like, would I be considered a nit? Would a tax nit be someone that takes like every little deduction, or someone that isn't aggressive at all and is like too conservative on that? See, I don't even know. Like, wouldn't the nit be someone that, did I buy a light bulb for my office? Deduct that. But like those types of things. But to me, the risk averseness comes out of like just not wanting to be audited.
Yeah.
So like I'm more likely to just say, what's the $2 light bulb being worth being audited for? Who gives a shit?
Yeah. No, I mean, at the end of the day, kind of have to run a cost benefit analysis. I wouldn't waste time on deducting for any light bulbs, but just keep in mind that in aggregate, everything kind of adds up. Some of these smaller expenses might pile up to be larger expenses or deductions that you're getting on your tax return. But no, I think for the most part, I am. I think I'd like to say that I like to file return, my individual return in a way that's most favorable to take advantage of the law as it is written, to reduce my tax liability as much as possible.
Right, because isn't that what rich people do?
That is what rich people do. They know to ask the right questions to the right people.
Right. So the right questions, we've been talking about the right questions.
Oh, for sure. So I think what I wanted to say is there's a difference between tax avoidance, which is completely legal. That's smart tax planning, versus tax evasion, which is illegal. So it's important to be on the fine line, the correct, side.
Correct side, obviously. But the right people would be you. So are you busy? You're probably extremely busy now this next month. But if people have questions and people want you to file and help tax plan, they could contact you on Twitter. I mean, do you have a website and the guide and everything? I want people to know. I want people to know this. Where can they find you? You have to. You're maybe good at tax stuff, but you're not good at marketing. So how can people find all this stuff out?
Woo! Shots fired, man. I think at the end of the day, Twitter is probably the best way to reach me. Just if anyone has any quick or even difficult tax-related questions, my DMs are always open, and I'm usually pretty responsive. But yeah, to your point, next month will probably be pretty busy for me. I do not have my own website, but I do have my own course. It's called Daily Tax Planning Around Your Daily Fantasy Sports Winnings. It's in the bio and my Twitter link. Definitely not the best marketer on planet Earth, but for anyone that's more interested in the subject and or planning to self-file on their own with a significant amount in winnings, it'll definitely be more of a step-by-step guide for anyone planning to self-file using TurboTax or H&R Block. So,
are you going to be able to file their taxes via DM also?
Definitely not.
Can I send you my? I got some stuff here, right?
Well, you already have a guy.
I already filed. My taxes are already filed in. I already paid.
You're one of the good ones. I think a lot of people tend to wait until the last minute, hold on to their paychecks for as long as they can, before filing, like the week of April 15th.
Well, I mean, no. Don't you find that people that are expecting a refund file early?
Oh, yeah.
Right? But obviously I never get, I'm always paying taxes.
So you're making estimated payments?
No, I'm never making estimated payments.
Oh, so you already owed though?
Yeah, I know. I already owed.
Okay. Okay.
No. See, the difference is that April 15th is when you have to pay. Doesn't mean, right? I think people get that misunderstood. Right. It's like, I don't mind filing my taxes early, but I ain't going to fucking pay them until April 15th. If I could use the money, I mean, obviously I'm fine doing it before then anyway, but it's the type of thing where, you shouldn't be like, oh, I can't, I don't want to pay the money. You could file as long as you have all the paperwork and done. Obviously DK and FanDuel, they always have to file an extension. You're never going to get the goddamn fucking 10, because you need that because that's going to be filed with the IRS, and then you have to make sure that's correct. So you can't really do anything until you get that. So once I get the shit from DK, I'm like, let me file this fucking thing. And worst case scenario, I don't pay until the 15th. Yeah. But I mean, most of the time, I'm just like, whatever it is, it's coming out of my money market account anyway. So just like, whatever. Here's the routing number, and fucking take it whenever the hell you need it.
Yeah, no, you are completely right. People can file for an extension of time, but not an extension to pay. That's still due, for individual return filers, April 15th. Your S Corp extension and return was due March 15th, which is, part of the reason why I'm sure you got all of that done already. But
no, I got this.
Oh, you got an extension of time to file.
Yeah. Well, I had to. DK is too. How am I supposed to do this now?
Yeah.
Right? What else am I supposed to do? I mean, when you don't get the shit until like 2 weeks before the deadline, and then you have an account that's like, I can't get this done in time. Like, I got fucking, there you go, the extension, whatever.
You might have to switch to FanDuel. They sent us tax forms second week of February, so gave us
still second week of February isn't that dramatically better?
Yeah. No, I agree.
No, but this coming tax year, I'm gonna be up on FanDuel. I've been doing well on FanDuel, so maybe it'll I'll get them quicker.
Yeah, I really only play on FanDuel, but I think I've started seeing a bigger presence and bigger contests in DraftKings, and so I may start taking some of my business over there. We'll see.
Yeah, because you also play. It's not like you're just a CPA.
Oh yeah, no,
you actually play.
That'd be super boring. Yeah,
right?
No,
that would be super boring.
I'm already a bean counter, and I'm just staring at Excel spreadsheets. Why not do it after work too, right?
Right. Okay. So Pete at Daily Fantasy CPA, follow him there. You're a pretty decent tweeter. So some of your tweets are kind of like dry and ironic or something.
Well, I tend to try to relate to some of the people that read my tweets. A little bit of self-deprecating humor here and there, but we're on Twitter for a little bit of a scroll, and not, I don't mean to bore everybody to death with Twitter tax knowledge, and so I try to keep it light and entertaining at times.
Well, follow him there. You can follow me at Blender HD on Twitter. You can always find The Theory of Daily Fantasy Sports, How to Think Like a Professional DFS Player, the 15-hour audio DFS Masterclass at theoryofdfs.com.